But start by telling us what your target is, say, in the next 3 months for Brent crude as well as for NYMEX. We have people talking about how 55 is going to average out now and that 60 could be the next sustainable level eventually.
Good morning. Certainly we do believe that looking into 2017, we're not quite sure that it may hit as early as in the first quarter of 2017, but we do think that the Brent price will certainly be trading towards $60 towards the end of 2017. Overall, we do think that, yes, we have seen OPEC make the first commercial decision in many, many years to cut production. And of course, they've now been joined, as Misha suggested, by non-OPEC members. However, we do think that there is still one unfortunate aspect of the decision that has to be seen, and that is, will OPEC actually stick to the production cut numbers that they've said they will? Unfortunately, history would tell us that they won't, so we're really going to have to watch very closely over the course of the first couple of months of 2017 just to see really where those production numbers do start to come in. If they are cutting, and we do see those numbers, then we certainly do believe that the Brent price will trade towards $60 and quite quickly in the near term.
Well, absolutely. The kind of gains, the volatility that we have seen in prices does suggest that, David. But apart from the implementation and compliance issues, what's your sense on the U.S. shale output? Because that yet has been another concern on how on the higher prices you might see the growth production come in from them on higher levels.
Oh, look, there's no doubt that we will see some increase in domestic production out of the US. If you cast your mind back to the middle of 2015, they were producing around 9.6 million barrels of oil per day. At the height or at the lows of the oil price when it reached sub $30, production dropped to about 8.4 million barrels a day, and that was only back in August. Now we've seen it just creep up to about 8.7 million barrels, and that's on the back of the oil price being fairly stable around the $50 mark. We do think that if we see Brent prices certainly and WTI prices perhaps just a tad lower, but around $55, then we will see domestic production coming back on stream in the US. We expect that it would probably tick up towards that 9 million barrels and stabilise there. That's going to create some headwinds for the oil price. Hence, we're not suggesting that we'll see an oil price maybe in the 70 to 75 regions, but only in the perhaps 60 to 65 region by the end of 2017.
David, one more question, and this really is about the demand going forward. What's your sense in Asia? Because much of the OPEC production is exported into Asia. I mean, Saudi has 2/3 of its export market in Asia, really. What's your sense? Because with this output cut, how would that impact the Asian exports?
Look, certainly we do think that Asia will continue to grow. China's been one of the culprits in terms of importing significant quantities of crude, and we believe in 2017 that that will continue. However, you've got to also look at the fact that we've got India, which is perhaps now in expansion mode. We've just got to get through this uncertainty of the currency and the impact that that's going to have in the short term. But we think longer term that India will continue to expand as well. We've got the US in expansion mode. So when you've got three very large economies in expansion mode, that's going to bode well for demand, especially in the Asian region where two of those countries are. And that's going to be one very strong tailwind.
Absolutely.
However,
David, just one final question, and this is really about some reports which do suggest that if these numbers actually go through, if we do see the 1.7 or 1.8 million barrel of a cut coming in, there are chances of an oil deficit as well at some point in 2017.
Oh, look, we think that the surplus at the moment is probably a tad around 1 million barrels. So if we get the 1.7 to 1.8 full cuts come, and they're actual real cuts, then we would see the market move into deficit fairly quickly in 2017. However, if that's the case, then that's going to have a significant impact on the oil prices. And you can probably throw our range out the window in the very short term. You could look at quite a decent spike well into the 70s. However, we think it's not going to stay there if that was the case, and we're really not looking for those cuts to actually be implemented in full.
All right, David, thank you very much for that. Appreciate